Thank you very much. I think it's working, so you can hear me. So, ladies and gentlemen, thank you for attending this session. So, the topic of our keynote today is about open banking, and the idea for me to tell you why open banking is such a game changer, especially in the lending industry. So, I'm Younes Winif. I'm the Chief Product Officer at Algol. I've been working for the company for 3 years now, and so the company, what it does is that it offers credit decisioning tools based on open banking that help lenders take better and fairer credit decisions. I'll tell you a little bit more about the company later on through the presentation. So before telling you why open banking is such a game changer, I'll tell you what the state of the market right now, or what's been done this last year. So a big majority of lenders are still using some 30 years old technology, which don't get me wrong here, it's good to have access to data, so credit bureaus mainly. But the data that we can get through credit bureaus has its limitation and its cons. So the first, I'd say con or thing, a specificity of the credit bureau data is that in some countries it offers a low Gini. So the Gini is the measurement or the index that we use to say to measure the discriminatory power of a credit score, and it's low because the data that is used is flawed or outdated. So as an example, if you are a lender and you use credit bureau data only, the data that you can get about the credit applicant can be 1 to 2 months old because they don't get updated all the time or every day. And statistics show that it's very important to know what's the financial behavior of a person a few days or a few weeks before applying to the loan, because otherwise you're missing some information about the credit applicant. And also it's known that many people are using or applying for loans to repay other loans or when they are into financial distress situation. The second point is that credit bureau data offers, by definition, low protection against fraud. So if you take the most advanced countries where credit bureaus are used, the UK and the US, for instance, so people are afraid that they get like robbed, or someone uses their name, their identity to apply for a loan because it can affect their credit report or their credit score. And by default, it's really low protection. People can really use the identity of someone else to apply for a loan. And the third point is that it's hard to implement. So credit bureau data is heterogeneous by default. So if you go from a country to another country, it's never the same data. So in Spain, there are credit bureaus, so you have access to some types of data. If you go to a country such as the UK, you have different types of data. The US is also the same thing. And in some countries, you don't even have credit bureaus, such as France, for instance. So this is kind of the state of the market right now. And now I'm going to tell you why open banking is such a revolution for lending. So open banking really completely changes the way credit decisioning can be done. So the first one is that we've done like tests, and we've seen that the Ginis, or the credit scoring models, are way more performant, simply because the data is up to date. If I am a loan applicant and I apply for a loan right now, and I give access to my bank accounts, it means that I'm giving a real picture of my financial behavior up to the second I'm applying for that loan. And this is very important for a lender to assess the real affordability and creditworthiness of a person. So the way the data itself is, which is up to date and error-free because it comes directly from the bank, is a very important thing and a game changer in the lending industry. The second point is that the data is immutable and authenticated directly from the bank. So there is no intermediary that will take the data and maybe modify it by error or make any errors on it. As a consumer, I share my banking data. It's directly transferred to the company that will assess my behavior and give a creditworthiness score or affordability assessment. And the data by design is secure, is immutable, and authenticated with what we know as ways of authentication, with doubling or the authentication through SMS or things like that that you use before you give access. So also by design, it's an anti-fraud solution. And last but not least, it's actually easy to implement because open banking data is banking data simply, so accounts and transaction. And a transaction is a description, an amount, and a date. So if you go from a country to another, it's exactly the same thing. So it's easy to implement when you're a lender and you operate in several countries or you want to open a new country. Of course, the models behind have to be adapted to each country, but the data itself, the input data is the same, which becomes easier for any lender to go operate overseas if there is a need to, because open banking is a worldwide thing. Well, we have the chance here in Europe to have the PSD2 and to have this standardized approach, but even in other countries, it's exactly the same thing, and there are companies such as the company I work for that handles the same type of data to give you like scoring and enrichment of that data country by country. Yeah, so this is why open banking brings a new thing, something that is up to date, something that can completely replace the existing or supplement the existing in some countries where there is a lack of visibility on people's behavior, and it opens up a lot of opportunities for lenders, whether we're talking about consumer loans, about mortgage, about BNPL. All the use cases that are related to lending can benefit from open banking and this new paradigm. Very quickly about Algon, the company I work for. So what we do is that we offer credit decisioning solutions to financial institutions and fintechs. So we use exclusively open banking data. We don't use any other sources of data, so open banking only. And we add to that machine learning and best machine learning algorithms that we can apply to that to help our client make adequate credit decisions, whether, as I said, be it for consumer loan or BNPL, which are the main use cases that we serve. But we also serve other industries such as mortgage loans or debt consolidation, for instance. So a few KPIs here or numbers. So Algon was created or founded in 2018 in Paris. We're a France-based company, but we serve several European countries. What we've seen with our customers is that we've been able to reduce credit risk by up to 50% for some customers. This number is valid when you keep the same acceptance rate. So if we go and see a customer that is happy with his volumes, loan volumes, they don't want to move this loan volumes, it's possible to reduce the risk or the credit risk by 50%. And if you want to increase the acceptance or the loan volumes, that's possible also by up to increasing it by up to 40%. If we keep the same level of risk, if the lender is happy with the risk they have. It can be also a combination of the two. We can play on the credit risk to decrease it and also increasing the volumes. So we enable, as I said, lowering credit risk, increasing volumes, reducing processing costs also, because many players or many lenders are still having manual processes and processes that take that cost a lot. And also it allows to lenders to provide digital experiences directly to their end customers to get like a new experience, to get a loan approved automatically within a few seconds or a few minutes instead of waiting maybe hours or days to get the loan. And by doing so, we help also the lending industry become more inclusive, because with open banking, I mean, everybody has a bank account, right? So today, many people in some countries are excluded from access to credit simply because they are credit invisible, they don't have a credit score or credit file report, because they are immigrants, they just arrived into the country, so there is not much information about these people. But your bank accounts is sufficient. If you have a bank account that you use during a few months, it tells your real behavior, and we analyze that to assess the creditworthiness and affordability. And by doing so, the industry is becoming more inclusive by serving underserved populations. It becomes also more responsible because it takes into consideration the situation of the person up to the date you underwrite the loan. And by doing so, you're also not pushing people to over-indebtedness. As I said earlier, some people take a loan to reimburse another loans they couldn't reimburse. We're not doing a favor to these people by giving them a loan. And by leveraging open banking data, our customers are able to be more responsible and not push kind of some people into over-indebtedness. Very quickly, how we do it at Algon, if you want to know a little bit more about our product portfolio. So we have 4 main products. The 3 first products are API based. So we are an API company, so our customers can leverage our API to implement their own credit policies and their underwriting process. And we have a 4th product that is called Algon Dashboard, that is more like visual product. It helps with manual underwriting. It speeds up the process, but it's more visual. So Credit Insights, very quickly and very briefly, is our categorization engine. So it takes open banking data as an input, and it will enrich it to tell our customers, the lenders, what's inside that data. For affordability assessment, we will detect the salaries, we will detect the expenses, we will help customers calculate the debt to income or many indicators like that help in the affordability assessment. But we will also detect any red flags that will help in this assessment. So if someone is having a lot of payment rejections, that's something we detect, and we give this information to our customers. If the person is not reimbursing existing loan, if the person has overdraft fees or check rejection fees or anything like that, so we detect the real situation and the red flags about the situation of the person to give that to our lenders to help them in the assessment of the affordability. The second product is called Credit Score. So it's self-explicit, so it's really a credit score. Think of it as a score that you can find in the US, the FICO score or other credit bureau scores. The particular thing about it is that it's exclusively based on open banking data. We analyze the behavior, the financial behavior, and we give you a score between 0 and 1,000. The higher, the better. The higher, it tells you the person is credit worthy. And it takes in input 3 months of banking data, and it will tell you probability of default of that person over the next 12 months. So it's mainly used in consumer loans. And then comes the third product, which is Payment Score. It's also actually a credit score, but we call it a payment score because it's more towards use cases around payment, specifically for BNPL, for buy now, pay later use cases. So this is a simpler score. It's also used to tell customers if end consumer is credit worthy or not. It's simpler because the scale is between 1 and 10, so the higher the better, and the horizon of predictability or the horizon of the probability of default is just 3 months. So that's why the use case is around BNPL. If we assess someone based on open banking data, we tell you how credit worthy is the person over the next 3 months. And then comes the dashboard. So dashboard is the visual product that underneath it's our three products: credit insight, credit score, and payment score. But you can see it through a visual interface here. One of the most advanced use cases that use this product is debt consolidation. So debt consolidation cannot really be automatic or automated because the situation of the people are kind of complex. People have 3, 4, 5 loans, and they want to consolidate those loans into one loan. So a human being has to intervene at a certain point. So what we do is that with the dashboard, we help our customers reduce the necessary time to underwrite like a loan application that goes from 45 minutes basically for complicated or complex loan applications to 3-5 minutes, because everything is presented in a way that simplifies the analysis for the people that work on that, for the underwriters. So this is how the dashboard looks very quickly, so I won't have time to dig deeper into it, but you have the score, you have the expenditures, you have the salary that is detected, you have an analysis of the evolution of the bank account of the person. If the person has several bank accounts, that's fine. We also analyze the full financial situation, and also you have all the categorization and all the indicators that can help you take a decision. Just very quickly, some of the clients that we work with in Europe. So you have BNP Paribas Personal Finance through CTLM brand. We have One, we have Floa, we have Cafidis, we have Toyota through Auto Finance, for instance. We have Revolut, Crédit Agricole, and many more. In terms of BNPL, we work with Alma, we work with Pledge, with other customers. Debt consolidation, also you have a list of customers that we work with. We work with American Express around the credit card use case. And then we have a variety of partners, including Mastercard. So very exciting that we just announced a new partnership, a strategic partnership 2 days ago with Mastercard that was announced during Money 2020 in Amsterdam. So this is a new partnership that we put in place with the help of Mastercard, and the idea is to serve the lending industry with this new paradigm of open banking and with new credit decisioning tools that are exclusively based on open banking. Mastercard is also known for its products and its force around the connectivity and open banking. So joining forces made sense, and very exciting for both of us to be working on this topic during the months and years to come. That was my last slide. I tried to stick to the time. So thank you very much for attending. So now if you have any questions, please feel free to ask. And I'll be around also during the whole day. So if you want to follow up or discuss specific questions about open banking, generally speaking, I'll be around.